going to get started today, and we're talking about a important topic, financial access. And we're talking about the connection between financial access and financial literacy tools, and what it could mean for economic development across the world, really. So it's an exciting topic, and we have two exciting people to talk about it, and maybe a third potentially. So one thing I like asking folks just to start off is how they found themselves in the digital asset space, because I always think that's interesting of how someone kind of came to this space and what drives them. So why don't we start off with you, Emma, and as you do that, you've given us a little bit about your background, but why don't you tell us a little bit more?
Sure. In 2016, I was working in banking. I had done banking right out of university. It was all I knew, and I liked it. But I've been doing it for 15 years, and I was a little bit bored. And so I thought, maybe I'll do something in fintech. That sounds interesting. That sounds fun. And I went to a friend's birthday party, and she said, well, what about Bitcoin? I'm like, what? She's like, what about blockchain? I still have no idea what you're talking about. And she said, well, why don't you come to this conference that I'm having? And so I went. I was like, okay, let's see. I don't know what this thing is. And nobody I had talked to knew what it was. And I went to the conference, and there were people there from EY and KPMG and Deloitte. And most interestingly, because this was back in 2016, so there weren't that many conferences compared to today, they had the Department of Homeland Security there. And I thought, I think all these people know something that I don't know. And I just fell in love with the topics and what they were talking about. And I thought, I can't go back to banking. And I jumped in full time, head first, never being an entrepreneur, not knowing anything. And all my friends and family were absolutely horrified. They had an intervention for me at a wedding. They were like, we think you should go back to banking. And I was like, no, I think this is fun. And I was crazy in 2016. And then at the end of 2017, Bitcoin hit 20,000. And suddenly I was an evangelist. When I got in, Bitcoin was at $400. And I have been in love with this ever since. It's amazing. It makes me happy. And I discovered crypto mining in 2018 and the Metaverse 2019. And I really believe I'm where I'm supposed to be.
Oh, well, that's wonderful. You know you're in for an interesting party when they walk in and they say, hey, what about Bitcoin? Let me tell you about that. You know that night's going to be pretty interesting. How about you, Jan?
Well, I moved to New York in 2019. And before that, I was 15 years in Asia, 8 in China, and then 7 in Singapore. And, when I was living in Singapore, all of a sudden, all the crypto entrepreneurs, including the Ethereum founder, all of a sudden moved to Singapore because the regulatory regime there was considered to be, very attractive for them because they were really building out Singapore as the digital assets in the crypto hub at that stage with good support, and at that time also a good encouragement from the MAS. So that's where a lot of use cases started off in Singapore across the region, and that's also how I got into this space.
Oh, that's great to know. Well, let's dive into our topic on financial access. And one of the things I'd be interested in hearing from both of you is how you each define the term, because I think how we define it tends to color how we, practice it. And what do you think the big barriers are to financial access that exists right now? Emma, why don't we start with you again?
Okay, because this is actually why I got in. When I was at the conference in 2016, obviously my thing was at the time financial access and talking about like financial services. And I heard someone say beside me that they had moved $250,000 and paid someone, and they only paid $2.35 in fees. And I was like, what? Because I had transferred $8,000 like a couple of weeks before, and I had paid $80. Now, admittedly, this is Canadian dollars, but still, definitely more than $2.35. I'm just saying. And I thought, oh my gosh. And I don't know if you guys know, but remittances, it's one of the #1 ways that banks actually get funds from people. So people come, they work, and they send money back home to their family. It's actually $1 trillion industry. And I always thought that if they could find a way to make it more affordable, but banks don't really want to make things more affordable for people, they could really find a way to put money back in the middleman's hand, like take money out of the middleman and put it back in people's hands. And I thought this is going to be really interesting. And so that's one of the reasons why I really got into this, because I thought this can be a way for people to actually make more money, or at least retain some of the money that they actually make.
That's interesting. Jan, how about you? How would you talk about financial access, and what do you think those big barriers are that still exist?
Yeah, I think, and I think the definition has evolved somewhat, or needs to evolve somewhat over time. Early days, the definition was, can I get access to a bank account? And frankly, I think that's outdated by now, because, you can perfectly well operate, and even, affluent folks are operating these days, younger generations, without an actual licensed bank account. So I think the definition is more, and I agree completely with Emma, can I operate financial services across payments, lending, saving, and insuring, and can I do that at a way that is trusted and also affordable for my income, or for my level of wealth? And I think that's an important one. And I completely agree with Emma. We had there were a lot of, for example, when I was living in Singapore, there were a lot of remittances between Singapore and the Philippines, for example, the Singapore helpers in Singapore. And not only was it exorbitantly expensive, on a salary of $1,000, they would pay $80 of fees, but they also had to spend half their Sunday, which was their day off, to basically queue up and actually, make all the paperwork happen and queue up for the actual transaction. And that is just not, because half a day of their holiday was gone by just queuing up at the agency. And those things are just, mind-boggling these days.
Yeah, sure. And you both alluded to this in different ways, but what do you think the role blockchain can play in increasing financial access? You've given us an example on remittances, but give us a little bit more of your thoughts on where the technology can play a role.
Well, I like it that it gives you privacy, and that's really important to me. I really think that, I know we all have challenges these days, but I don't know about you. And I never thought I would be this person. I'm actually afraid to pick up the phone right now whenever it rings, because you never know who it's going to be. And after hearing all these things this morning, is it really my father that's on the other line? Is everything okay? And so what I really like about blockchain is that it provides a measure of privacy that we need, data security, which is great, but I'll get into other things that we do need, like such as, regulations. We'll talk about that later.
We'll get there. Well, I'm sure. And Jan, for you, how does blockchain make a difference in financial access? You've told us about remittances, but give us a little more of your perspective on it.
Happy to, John. And my thinking has evolved a bit over the years, I have to say, because blockchain, I think, is a technology. And I think while we all see a lot of the potential from the technology in, radically improving and changing the financial system, I think now, where things are heading right now, I think blockchain is an amazing tool to help financial inclusion with multiple use cases across, specific, localized, challenges that are being faced for financial access. If you think about farmers in Africa, if you think about, remittances, as I think we can all think about how do we solve for the trillions of dollars that are needed to drive financial access. I think blockchain is a great technology to actually do that bottom up, grassroots, train people, educate people, and make them see that this technology is private, protects data, is secure, etc. So I'm a strong believer in actual, education. And while we all need to strive towards more standards and more interoperability, I think it's great if they are at the level of the technology, so that people are not building up technical debts and legacy systems when they are building use cases, but give them the tools to actually build those use cases for very specific applications. If you think about, one of the conversations we had right before is, asset-backed lending for farmers in Africa. You can have, pretty standardized technologies to actually build that, but it's really up to often the local communities and local regulators to actually, get that going.
And Jan, I'm glad you go ahead. Emma, you were about to say something?
Jan just reminded me of something that I thought was very innovative when I first heard about it. There was a coffee shop that was able to use blockchain technology to trace where the coffee beans came from. And then people were actually able to use a QR code and tip, but you could have the tip goes directly to the farmer.
Oh, wow.
So as we know, you pay an exorbitant amount for coffee, and very, very little of that actually goes back to the original coffee farmer. So this is a really great way for them to actually get the funds. And because of blockchain technology and food traceability, which is what is one of the great things about blockchain, they were able to do that. And I thought that was absolutely fantastic.
So you've both mentioned technology, and I think it's a good reminder that that's all this is, right? A technology, and we can use it for good, or we can, people can use it for things that are not so good. But when we're talking about financial access, where does the technology go? How do you feel that you know what it could do for financial access to a certain respect, but what is the improvements you would like to see, or the enhancements or advancements in the technology to take the next step on financial access?
Okay, I'll start with that one. That was not an easy one. I think one of the challenges that we have actually is we understand it, but quite frankly, it's a little bit complicated. Let's be honest. It's a little complicated for the average person. And like I just mentioned about security, when you understand it, it's great. But when you don't understand it, the opportunity for it to go wrong is very, very paramount, and we need to be cognizant of that. And so I think if we can make it easy for the average person to actually use and understand, we would go a long way to more adoption, because I really think that, for example, we understand it, but it's a little bit difficult when you're trying to explain it to, your older aunt who loves what you're doing and wants to support you by putting in $200 into Bitcoin or into crypto or whatever, right? And then she thought, oh, I'd like to be able to send some money home, but then it's a hard time explaining that to somebody over the phone,
right?
How they can do that.
And Jan, do you run into, let's call it an understandability gap? I maybe just made up a word, but that's just fine. We're all friends here. Do you run into that when you're engaged with traditional market participants as well?
Yes, of course, all the time. And, I think that's really a critical dimension. Maybe first of all, I think on Emma's point, I totally agree. I think, education about technology and the potential of the technology is absolutely, critical. I think there's a lot also to be done in just providing the digital access. I mean, it's easy for us to say, but just getting the digital access and the digital tools is the first step. And then education is the next step. But yes, also with the traditional participants. And I think we should make a big distinction between, a traditional participant, for example, do I think that blockchain technology would be the first solution to move trillions of dollars for a large global institution around the world? No, I mean, that's not the idea here. But that's why I think this whole idea of grassroots use cases with multiple uses of the technology is really a great way to go, and can actually, it's like, instead of giving people the fish, it's teaching them how to fish. How do you use blockchain technology, and how do you use those tools to build use cases that improve your society? And I could see a whole range of, and a whole young generation of, digital savvy, educated folks that are driving use cases that make a lot of sense, that don't cost, frankly, a lot of money. And that can be extremely helpful to local communities in terms of financial access.
Oh, that's interesting. So let's talk a little bit about the informal economy, because we talk a lot about financial access, but I think some of the things that we want to focus on during our session today is the role that the informal economy plays, especially in lower and middle income countries, in setting up barriers for financial access. So, Jan, I'll start with you. In your experience, how does the informal economy really impact financial access goals?
So I think that's a challenge, and that's mostly, and for me, again, that comes to some extent back to the education point. And I think that's also why, and this would be my biggest challenge with the traditional players. And this is both developing markets and developed markets. But for example, why there's still a lot of, underbanked and unbanked people in the US, for example, has nothing to do with technology or access, etc. It has to do with trust. And it's not just trust in, is my money safe, but it's also trust in, is this institution going to, charge me, an arm and a leg when something doesn't go right? Or, what happens to my data, and are they going to be sharing my data, elsewhere? And so I think that whole trust component is really important. I don't think, and this is an interesting one, when you look at trust in banks, the diversity across countries is huge. And it also is quite volatile over time, and it even differs a lot by institution. I'm just using that to say that, the banks, and I use it a lot with our clients, the banks don't have the monopoly on trust any longer. Think about regional banks in the US, for example, quite challenging. But the same thing happens in a lot of the emerging markets. For example, in China, actually, some of the banks in China are not actually that well trusted by consumers and by customers. So I think that trust component is really something to focus on through education, but then also through how do you actually manage that and value it.
So Emma, I want to get your thoughts on the informal economy, but I also interested to get your perspective on what Jan just said about this need to build trust to kind of overcome the barriers that sometimes are presented by the informal economy. What do you think about that?
Yes, I think, and there's really no real diplomatic way to say this. I think that from what I have seen before, the less education you have, the less trust you have in banking systems. And also what we're seeing, to be fair, is that they're really not living up to the standards of what they had back in the 80s and 90s. What we're seeing right now is that they really don't, trust is being eroded quite a bit. And what we're also seeing is that I'm looking in Africa, they're actually spearheading the way when it comes to innovation and what you can do when it comes to various wallets and how you can transfer money from or transfer funds from one person to the other without using a financial institution. And I find it very interesting and very heartening to see that they're able to do a lot with just a phone and an internet connection and make things work without all the barriers that we're seeing in the first world, or I shouldn't say that, rather in the developed nations. And one of the things that I really find really interesting actually is that banks don't necessarily, especially, I'm Canadian, just so I'm really trying to be diplomatic in how I say things. But especially in Canada, banks as a whole, they're not a huge, they're not really fond of blockchain to a certain extent. And I'm not gonna kid you, certain people with 3 initials shall remain nameless on this podium or on today, but they really didn't make our lives easier. We all know who I'm talking about. We're not gonna say, but we all know who I'm talking about. And so I don't know if you guys have this here in the US, but in Canada, banks can shut you down if you are a business without any rationale, without any reason given. And so, particularly if you have the name blockchain or something alluding to that, they can just shut you down with no reason given. They can't do that with your personal account, but they can do that if that. So there's a lot of, there's no real trust that is there. And we also have an interesting regulatory framework, which is why when you talked about Ethereum and Vitalik, and they actually went from Canada to Switzerland first, and then from Switzerland to Singapore because, or there's some trust that needs to be had, and they weren't very engaging with that or forthcoming. So there is some work to be done, but I do honestly like what I'm seeing in Africa. I see that these developing nations are really spearheading the charge, and we're actually seeing what they're doing, and then we're bringing it back and using it here, and that makes me happy.
That's interesting, Jan. Have you noticed that as well, where change is kind of, or innovation is kind of growing overseas, and then the US is adopting it?
Well, yes, I lived in China from 2004 to 2012, which was the rise of Alipay and Tencent. So yes, absolutely. And I think certainly when I moved from China and then to Singapore and then to the US, I was together with I actually there were a number of client executives of mine who also moved from Asia to the US. And at that time, and this is now 4 years ago, I think a lot of catching up has been going on. But if you certainly look at everything related to payments and just everything in terms of digital experience and digital user experience, yes, absolutely. I think there's a lot that's coming from some of these developing markets that I think developed markets like the US could benefit from. I had to learn how to write a check, for example, here in the US. Because I had never seen a check before.
I'm so sorry, what?
No, there's no checks in Singapore or China.
Ever?
No. Why would they?
I mean, I know what a check is. I write like one a year, but I still know what it is. Wow. Okay.
Okay, so we all just learned something.
It's also quite bizarre that you develop an app to take a picture of the check, and then that's your digital experience. Why?
Mhm.
Oh wow,
Why?
he's got a good point there.
Why?
Here we thought we were being innovative.
Why do you still have to write this check?
So I got to be honest with you, Jan. I feel like I've got relatives who I still can't get to stop sending cash in the mail to my kids. So I can't tell them that we're taking away the checkbook yet. If I do that, I'm going to cause like a big rift in my family. So I can't get there with you right now.
But you're checking your mailbox?
Oh yeah, every day. Okay, so we're all here around the UN General Assembly, and we're focused on the Sustainable Development Goals. And one of those goals, of course, is the elimination of extreme poverty throughout the world. What is the role that blockchain can play in that? Emma?
I'm so sorry, I'm going to ask you to repeat that question. I was still stuck on the.
Hey, Jan threw us for a loop here, man. I don't know this checkbook thing.
I'm so sorry.
No, but we're talking about obviously sustainable development goals, extreme poverty elimination. What is the role that blockchain can play in extreme poverty elimination?
Oh my gosh, so many things. With the examples I gave before with the coffee farmers, using blockchain for that. As we talked about remittances, and just the fact that you're eliminating the middleman now, that's where blockchain technology, I do believe, and I have to say this here, I really do believe that there's space for everybody. It's not an either or situation. You can have banks and you can have people who use blockchain, and you can have people who use both. It's not an either or situation. And I really do think that people need to think about that. There's no reason to go radically to the left or radically to the right. We can coexist in the middle and be happy that way. And I really do think that security is paramount these days, and we're really, I think blockchain can definitely help with that, as well as privacy. Yeah.
Huh?
I think two key things. I think one is, a lot of the efforts in terms of eradicating extreme poverty suffer from very high administrative costs. And so you can expect that between 15 and 25% of, funds that you would donate to extreme poverty are going into administration. And I think blockchain can be a real game changer for that. The second one is, and again, certainly certain areas and certain domains of extreme poverty, you have to make sure that the money ends up in the right place at the right time, and that it's also, spent in the right way. And there again, blockchain can make a huge difference not by being, paternalistic about it, but just by making sure that the use case is built so that the money ends up in the right hands and then is also spent in the right way. Back to, for example, and that's again a personal experience. A Singapore helper who queues up, and by the way, that's been in the meantime, blockchain players have solved for that. But even if that helper then succeeds in sending her salary to the Philippines, one of the challenges is it could end up with her husband, who basically spends it in the first 3 days gambling and drinking. So one of the applications and use cases that the blockchain players have made that now drive those remittances is to basically make sure that the helper based in Singapore can actually allocate it directly to the electricity company and the utility companies that need to be paid to support her family. And those, I think, are really use cases that, without being too interventionist, can really, I think, make a huge difference. And that's all extremely helped by blockchain technology.
One thing I thought of, and I was very happy to see it when it happened, but sad about the circumstance. When the war started in Ukraine and they were trying to get up banking, and it was taking them a few days, their finance minister tweeted out, "Send crypto," and like they had the address there, and it was really nice to see, because after all the the things that happened and all the bad news, and blockchain's bad and crypto's bad, because some people can't necessarily separate them both. It was nice to see that it was being used for so publicly being used for a force for good and being thought of as something that can help. And they did eventually get their banking situation set up, but it was really good to see that.
Okay, that's a good point. So Emma, we're going to test your diplomatic skills again now. So we've got to talk about whether you see in your practice or in your work traditional financial institutions being cooperative or uncooperative with newer blockchain players. We're going to try here.
Well, not all agencies are created equal. Everyone means well. I do actually see that everyone does have a goal where they want to protect the consumer, and I understand that and I appreciate that. I do think that some consumers need protection, and I do think that some consumers are absolutely fine. I also do think that I'm really trying hard here, everybody. I'm really trying hard.
I appreciate you.
I'm not gonna kid you, a good 80% of my friends are still in banking. I really need to be careful here. I think there's room for improvement, shall we say. I think there's room for improvement. I think it could be better. I do think it's not, once again, an and or. There is room for everyone to exist. I do think that they don't necessarily, some of the agencies don't necessarily need to be as heavy-handed as they are. And it's kind of like, when you're younger and they say, and you get that report card and it says, does not play well with others. I think that's where we are right now. So we could just move it so that for the next report card, it's like, has improved, does play well. They're looking for a solution together. it's not just a bad, this is a bad thing to do. It would be great.
So Emma, I like that. When I'm at home, my spouse often tells me that the largest room is the room for improvement. So Jan, how about your perspective on this? Cooperative or uncooperative when you're dealing with traditional financial institutions?
Well, given that I lead our banking practice, I gotta be even more diplomatic Emma here. And the best way, I think, is to bring it back to financial access, because frankly, for most of the banks, both in developed markets or developing markets, those are not customer segments that are actually being targeted by the banks, because they, if you have no money, then you're not interesting to the bank, and if you don't have a credit record, or you are not sure about repaying your credit, then they're also not interested. And I think that's that's also an opportunity, actually, and that might lead in some cases to wake up calls for the banks, because once the new players take off and scale, then they become a threat, and then you will see some interesting competitive dynamics. But before that, I think there's still a lot of room and a lot of opportunity to provide better financial access without actually being hindered, actually being encouraged, because there's more and more regulators also that start to tell the banks, well, how come you're not serving those customer segments that are important, in the world. So, yeah.
And do you know that some of the financial institutions, I can probably name 10 of them, you can also probably Google them, they offer crypto services to their top 1%. And you know why? Because they ask them for it, and they want to hold on to those customers. And if you're not going to give them what they want, they're going to go somewhere else for it. So they do actually offer them, but you have to have an extremely, extremely high net worth to get that. So that was interesting to hear that from that perspective. I also do some work with credit unions, and here's what I found. Some of those credit unions, they also offer crypto services to more average Americans, shall we say. And here's what they found. They were using it as a store of wealth. So they're like, we don't know necessarily what's happening with crypto, but we're going to put aside $20, $30 every paycheck. And they're just using it as that's their new savings. And I found that very interesting. So we're seeing different things happening. And I think that maybe banks might start catching up to the credit unions, because people are putting their money away there in a different form.
Okay, so we've just got a couple minutes left, and I don't want to get the cane to come out and drag me off the stage. So if you can give me a sense of, if you're developing out there, you're a market participant, you're developing a blockchain-based financial solution, could you give me a top 2 kind of regulatory concern that you might, say is present for those market participants?
KYC, AML, right off the bat. Are you who you say you are, or are you Sandra? You have to be very careful about that. And once again, security.
Right.
That's probably a really big thing. I know everybody knows someone who has bought crypto and has misplaced it somewhere on their computer or their phone, or can't find the keys or something like that. So security is a big thing too.
Okay, Jan, how about you? Top 2 regulatory concerns for blockchain-based financial solutions?
Yeah, I would agree with those. I think fraud is a very big one for me as well, because certainly if you look at some of the emerging markets, Africa, for example, at this stage, there's an informal economy running, or there's actually not a solution for helping these people get financial access. So frankly, KYC and AML are still far away. But I think to build trust in the technology and in the use cases, the technology we know is good, it's great, it will bring a lot of good. The problem is that if bad actors, create, challenges to the trust, that's what's I think so critical to just make sure you can avoid fraud. And I think blockchain as a technology overall is great for that. And that's why I strongly believe in these grassroots use cases in local communities that are being monitored by not even the banking regulators or that, but by community participants themselves, to avoid that bad actors take away the trust that's there.
Okay, well, Jan, Emma, thank you. We did this and we did it on time, so this was good. I hope everyone liked the panel.
Thank you, everyone.